Gold has traditionally been both a store of value and a medium of exchange. That's important to understand. If that's right, you could be talking about a gold price that was $7,000 or $8,000 or $9,000 or $10,000. Am I saying gold is going to go to $10,000? No, but I'm saying that there is a strong enough possibility of it, and the consequences of that for you maintaining your lifestyle with a US dollar denominated balance sheet would be very unpleasant. So I think that people who are concerned about those things need to own gold. And I think that message circulates well. And I think for better or worse, the gold price goes higher and perhaps much higher.
Throughout March and April, gold prices surged, breaking new records with each headline proclaiming an all-time high, only to be swiftly followed by another. Central banks, astutely recognizing the risks inherent in the market, have emerged as strong buyers of gold over a sustained period. Their motivation lies in shielding themselves from the potential havoc wrought by geopolitical and currency fluctuation, which can severely impact reserve value. Notably, major countries like China have intensified their efforts to bolster their gold reserves, sending a clear signal to the market that even governments are prioritizing physical gold as a safeguard for their reserve. This trend underscores the enduring significance of gold, beyond mere price fluctuations, as a cornerstone of financial stability. Rickrule, the founder of Rule Investment Media, stresses the importance of considering inflation-adjusted gold prices. While many celebrate new nominal highs, the true real highs, adjusted for inflation, remain substantially higher, necessitating gold to surpass $2,700 to achieve them. This distinction highlights gold's resilience in maintaining its value over time. Escalating debt levels, particularly in the United States, further accentuate gold's role as a hedge against the erosion of fiat currency purchasing power. With the gross federal debt amounting to a staggering $34 trillion and the US dollar having lost 98% of its purchasing power since 1971, gold has proven its worth as a reliable store of value. Rickrule underscores that while specific price targets may be speculative, the rationale for owning gold remains compelling. Central banks, including China's, recognize gold's enduring value as both a store of wealth and a medium of exchange, particularly amid geopolitical tensions and economic uncertainty. As the global landscape continues to evolve, gold's role as a strategic asset is poised to gain further prominence, offering investors a dependable hedge against financial instability and currency devaluation. But before we proceed, please remember to show your appreciation for this video.
The first thing is, when people say that gold is broken up to new all-time highs, they're talking about nominal highs, not inflation-adjusted highs. Work that I have seen by the World Gold Council suggests that in constant dollars, that gold would have to break out above 2,700 to get to new real highs. It's interesting that when people talk about money, they don't talk about money in terms of the constant. And when you talk about gold, you are talking about the constant. So my suggestion would be for gold to take out the old highs, which I think it will do. It would have to go through 2,700. For me, gold isn't a trading vehicle. For me, gold is a store of wealth, a medium of exchange, liquidity, and insurance. And I own gold because I'm afraid of our incomprehensible debt levels. I own gold because the interest expense of the US government, I say the US government, but I could just as well say the EU or Canada, is going to overwhelm our ability to sustain it. I'm old enough, Daniela, that I remember the decade of the 70s. We dealt with it by inflating away the purchasing power of the instrument that the debt was denominated in. Over the course of the decade of the 1980s, the purchasing power, constant purchasing power of the US dollar declined by 80%. I think that sort of thing is precisely what's on offer now. If that's right, and I believe it's right, if that's right, you could be talking about a gold price that was $7,000 or $8,000 or $9,000 or $10,000. Am I saying gold is going to go to $10,000? No, but I'm saying that there is a strong enough possibility of it, and the consequences of that for you maintaining your lifestyle with a US dollar denominated balance sheet would be very unpleasant. So I think that people who are concerned about those things need to own gold. And I think that message circulates well. And I think for better or worse, the gold price goes higher and perhaps much higher. Gold has traditionally been both a store of value and a medium of exchange. While it doesn't provide a yield like U.S. Treasuries in terms of being a savings instrument for the Chinese central bank, it provides them more security of principle than other currencies of trading partners that they may have, the Russians as an example, or the Chinese. So gold is, I think, for the Chinese central banks and for many other central banks, fulfilling its traditional role, both as a medium of exchange and as a store of value. Imagine if you were the Chinese and you ended up with several trillion rubles and you didn't have the ability to spend it on anything from Russia. When it was efficacious for them to denominate their trade in US dollars, they did it, and they did it comfortably for years, and they were for years the largest holders of US treasuries. The relationship between the US government and the Chinese government now probably leaves the Chinese no choice but to reduce their holdings of US treasuries and substitute gold for that asset class.
Gold reaching new all-time highs is typically discussed in terms of nominal highs rather than inflation-adjusted high. According to research from the World Gold Council, gold would need to surpass $2,700 in constant dollars to achieve new, real highs. This perspective highlights the importance of considering the constant value of money when discussing gold. For the speaker, gold is not merely a trading vehicle, but serves as a store of wealth, a medium of exchange, liquidity, and insurance. They express concern about unsustainable debt levels, particularly in the US, and believe that inflationary policies will erode the purchasing power of fiat currency. This belief leads them to suggest that gold prices could potentially surge to $7,000, $8,000, $9,000, or even $10,000. Although they acknowledge this is speculative, gold holds traditional significance as both a store of value and a medium of exchange. For central banks, including China's, it provides security beyond other currencies, especially in light of geopolitical tension. The speaker suggests that countries like China may reduce their holdings of U.S. treasuries in favor of gold due to shifts in the global economic landscape and the changing dynamics between nations.
The recent strength in gold, and by recent I mean the last 2 years, has been more a function of central bank buying than retail buying, even in China. The Chinese market, and to a lesser extent the Indian market, has seen more retail buying than the US market, which has in fact seen retail selling. But the statistics would suggest that the buyers of gold in real size have been foreign central banks, reacting, I suspect, by the US government's attempt to weaponize the US dollar, whether it is seizing $300 billion worth of Russian holdings of U.S. Treasury securities, which should make any country that holds its wealth in U.S. Treasuries concerned, or the weaponization of the SWIFT banking system by the U.S. To reinforce sanctions. Whether or not, as an American, you agree with those policies or not, they're disquieting to foreign central banks, who have suddenly come to understand that denominating all of their foreign currency transactions and their national savings in US dollars and US Treasury securities is not a good thing. With regards to the difference between Chinese buying, that is Chinese retail buying, and US retail buying, the Chinese government has an official policy of encouraging their savers to save, among other things, in gold, which is to say that they have facilitated gold transactions and encouraged it after, a policy many years ago of making it illegal. So there's probably an awful lot of pent-up demand in China, which is also facilitated by the Chinese government. And as you say, the weakness in the renminbi has meant that while gold has done well in US dollars, it's done very, very, very well in renminbi. What I told people about silver was that traditionally silver followed gold, that gold needed to move, that the narrative needed to be established by gold, and then silver would follow through. What I tried to say in the interviews that I think you're referring to were that the silver stocks were truly a coiled spring. There was so much hate around the silver stocks, probably as a consequence of their fail during the 2020 and 2021 silver squeeze. I like to say there's no hate more sincere than the hate of a jilted lover And silver and the silver stocks certainly built up a lot of jilted lovers, young jilted lovers, particularly passionate ones in 2020 and 2021. The consequence of that is that the silver stocks got way, way oversold. In my career, that's happened 3 times before, and I'd adore to see it happen again. I own gold, or physical bullion, I guess, is insurance. I own the silver stocks as a speculator, and describing them as coiled springs, I think is really accurate. There is not enough market cap in the legitimate silver stock space to handle the capital that will come into the space if the generalist investor buys into that narrative. I've seen that happen before.
In the past 2 years, the strength in gold prices has primarily been driven by central bank buying rather than retail buying, a trend observed even in China and to a lesser extent in India. This shift is significant as it indicates a broader movement towards gold as a safeguard against geopolitical and economic uncertainty. Foreign central banks, in particular, have increased their gold reserves in response to concerns over the potential weaponization of the US dollar by the US government, such as seizing Russian holdings of US Treasury securities or reinforcing sanctions through the SWIFT banking system. In contrast to the US market where retail selling has been observed, the Chinese government actively encourages its citizens to invest in gold, facilitating gold transactions and reversing previous policies that prohibited such actions. This policy shift has led to pent-up demand for gold in China, especially amidst weakness in the renminbi, driving gold prices even higher. Regarding silver, there has been a divergence between gold and silver stock. Traditionally, silver tends to follow gold, but recent events like the 2020 and 2021 silver squeezes have caused significant volatility and negative sentiment around silver stock. However, Rickrule sees this as an opportunity, describing silver stocks as a coiled spring that has been oversold. He owns gold as insurance and silver stocks as a speculative investment, anticipating potential capital influx into silver stocks if the generalist investor buys into the narrative. Thank you for your continued support. Share your thoughts in the comments below. Don't forget to like, subscribe, and turn on notifications for more enlightening content on precious metals and financial strategy. Thanks for watching.